as an investor in the stock market, there are certain days in which you're like, I don't want to see the brokerage account today. No, not today, man. Don't show me the numbers, right? And the more money you have in the market, the more beautiful those green days are, but the more pain on the red days. And today was one of those days for me. Oh, okay. Yeah, no bueno, okay? No bueno. The public count down $63,000 here today. My main private account down $91,000 here today. I think if you added up all my different accounts, it was probably down, I don't know. Today was probably like a $200,000 down day. You know, we can call that an S&X type day there. Ooh, just rough, okay? A lot to talk about in today's video. I want to talk about a ton of different stocks. So if you're somebody that enjoys a lot of stock talk, we're going to talk about a lot of stocks in this video and kind of what's going on with them, my opinions on them. We're talking about the state of the market. Yeah, we got a lot to get into in today's video. Hope you guys enjoy this as always. And, I always I got to make fun of myself sometimes, okay? The chef. So the chef starting out here. So stock was down 10% here today. This is a big part of why my accounts were no bueno today, okay? A huge part of that was obviously the chef having a tough day, down 10%. Off of earnings that obviously missed on revenue, missed on profitability, missed on everything. Like everything missed when it came to the chef. I'm amazed that the stock was not down more, to be honest, today. I mean, this stock had ran into earnings very nicely. And usually if you run into earnings like that, you better come out with some banger numbers to even get a chance to get your stock price to go up. I think when it comes to Chef, I think the way just a lot of folks are looking at that is that they understand that that is likely the worst quarter and everything gets better from here on. And so I think that's what Chef Bowles obviously believe, and we'll see if that comes true over the next couple quarters. But that's at least the belief, and I think that's why that stock was not down more. I think there's a lot of other stocks that if they came in with those sort of numbers, that the Chef came in, I think they would have been down 20, 30, 40% after coming in there. Revolve. So RVLV was down big here today, down 8%. Now, I listened to the conference call inside the private stock group last night, okay? And here's the deal with RVLV, okay? This is a very well-run business. This is a great company. If you look at their numbers over time, it's been amazing what they've done and what they've accomplished, okay? However, they gave us a massive warning on that conference call, okay? And this happened last week. I just got a chance to finally listen to it, okay? They gave us a massive warning. And I appreciate the management team at Revolve in a huge way. They just call it the way it is. They're like, hey, here's kind of the situation. Here's what we got going on, ... okay? One, they talked about they have a little too much inventory. Maybe not as bad as some other retailers, but they still have a little too much inventory, which leads to this whole inventory problem that we have pretty much just across all of retail right now, right? But that was just the minor warning. The worst warning was they talked about, as the quarter went on, their business deteriorated more and more. And they're expecting this upcoming quarter to put up some of the weakest growth they've seen in the business model in quite some time, okay? They're expected to still, from what I heard, grow the business in this upcoming quarter, but it's expected to be kind of like very low growth for the company. And there was even talk about potentially in the following quarter, which would be more the fall time / let's call it like Christmas quarter, of potentially negative numbers for the revenue line, okay? Now, no one wants to hear that. No one wants to hear that this company is likely going to see revenues decline over the next couple quarters. Not only that, they also said they expect margins to go down over the next couple quarters. So in RVLV, at least for a short-term perspective, you're sitting with a stock where a management team has said, hey, we expect revenues to get worse over the next couple quarters and margin to get worse over the next couple quarters. I mean, that's not an ideal situation for stock, at least in the short term, right? And RVLV definitely has a good amount of long-term shareholders like myself. I have, a decent amount of money in RVLV, and I might build the position bigger while they're kind of in this, let's call it slump for the next couple quarters. But yeah, from a short-term perspective, no one's going to want a piece of RVLV, at least in the short term, given the current environment we're in where, no one wants to hold a stock like that in this sort of environment, right? Honest Company was down 8% today. What I think happened with Honest here today is I think everybody saw the Chef, right? And they're like, oh my gosh, Chef is Honest going to come in with those sorts of numbers, right? And also there's just a lot of devastation in general in the small caps. And obviously Honest is a very, very small cap company. We're talking about $300 million market cap. And so I think a lot of folks are just like, oh, they're coming out with earnings here in a few days, sell, kind of get out. And we'll see what happens with obviously the earnings report. And I think that's kind of what played out there. And then as far as Shopify here today, this one down 7.6%. Here's the deal, okay? if the market goes, and today was definitely a risk-off day, okay? Today was definitely one of those days in the market where people said, you know what, the market's been fun. We've made a lot of money over the past, let's call it, 4 to 6 weeks in the market, coming off the June bottom. But you know what? That might be all potentially ending, and we might be in a situation where we're about to go risk off again, okay? Obviously, CPI comes out tomorrow, so I think that's the way some folks are looking at it, and they wanted to kind of like wash their hands a little bit here, maybe take some profits because they don't know what's going to happen with those CPI numbers. And what we know is we've gotten screwed by the CPI numbers many, many months in a row, and it tore the market up, right? And people are scared that maybe another one of those situations is going to happen again, and we go down, straight away, okay? And so a stock like Shopify in that sort of environment, Shopify is going to do great if it's risk on. Bottom line, if we're going risk on and NASDAQ's pumping, Shop's going to way outperform just about everything that's, let's call it a $40+ billion market cap in the NASDAQ. I mean, it's just one of those sorts of stocks, but you go risk off, that baby, you get a 7-8% drop in a matter of, one trading day. That's just the way it is, okay? Oatly down 7.5% here today. I think that's just a follow through with a lot of the other smaller cap stocks where it's just kind of like risk off, right? And after the Chef earnings, I think it's just a lot of people are kind of like, Palantir down again today, about 6% here for Palantir after it was down. Yesterday it was down about 14%. So, I mean, we're talking like 20% down in a matter of 2 trading days here. When Palantir, I looked at their numbers, okay? I looked at Palantir's numbers, and my opinion was, they weren't a disaster. I feel like there's definitely a lot of people that felt like the numbers were a disaster. I didn't feel like it was a disaster. I felt like the numbers weren't, obviously they missed expectations across the board, okay? I did not feel like that was a disastrous quarter. I think given the current operating environment, look at all these public companies. You see almost no one killing numbers right now, okay? From what I'm seeing out there in the market, you've got companies either slightly, and I mean very slightly, beating their numbers or missing numbers, okay? And so, or barely meeting numbers, okay? So we're not in a strong operating environment that, companies are just coming in with beats and beats and beats. If Palantir had announced those numbers in a quarter in which, companies were tearing it up, and you looked at all these big tech companies and it was like, wow, they killed their estimates that they were supposed to do, and you looked at all the other software as a service type companies and they all destroyed their numbers, then I would be much more worried, and I would call Palantir's quarter a disaster. I did not personally feel like that was a disastrous quarter given the operating environment we're in right now, okay? So that's my perspective on that. If that stock continues to go down and goes to 7s or 8s, I would love to pick up some more shares of Palantir. I got a little position in Palantir as of right now. I would not mind building it into a big position if that baby falls to 7 and 8s. And what does it take to get Palantir to $7, $8 range? Little risk off in the market. As simple as that. Like literally if NASDAQ goes down 5% over the next, let's say, week or two, let's say CPI comes in bad or the market doesn't like it, whatever, okay? If there was a sort of situation that happened, like Palantir would be down 7 and 8 range, like literally in a matter of a week or two. Like that's just the way it works, right? So, we'll see kind of what happens there. But if the market goes back risk on, Palantir is going to come flying back, and next thing you know, it's going to be 11, 12, 13 bucks again in that one, okay? Big tech across the board was just nasty today. We covered Shop down 7.5% here today. Snowflake down 6%. Here's the deal with Snowflake. Everybody looked at those Palantir numbers. They're like, Palantir just missed pretty much across the board just about with Palantir. And so people think that, a similar phenomenon is going to happen with Snowflake. Also, Snowflake obviously trades at very rich multiples. You look at that company, right? Very rich multiples. So if you're in a risk-off scenario, Snowflake's going to sell off big. That's just bottom line. It's almost like a mini version of Shopify in kind of that respect, okay? AMD and Nvidia. So I don't know if you guys saw the news came out of Nvidia yesterday. Very bad news. I'll share that with you in just a moment here, what happened there. And so this is just kind of like follow through, in my opinion, on that very bad news that Nvidia announced last night, okay? Uber down, Tesla down. That's kind of to be expected. Look at Apple and Microsoft still holding up. I mean, it's just those two stocks, okay? I don't even want to talk about the fundamentals of Apple. I don't even want to talk about the fundamentals of Microsoft. Those stocks of those two companies are just, very resilient. Let's just call it that, very resilient. And I think even Michael Burry has, if I recall, a big short position or puts or something on Apple. But that one just, it continues to hold up. It's amazing. It's amazing to see how well those stocks really hold up, okay? Now, what happened last night, this is something that should give everybody pause in the stock market, okay? And, I think this is more bad news for the economy. Nvidia stock sinks as revenue estimates miss, gross margin outlook slashed. Shares plunged of Nvidia after the chip maker shared preliminary, okay? When you have companies, and this isn't the only company that's done this, I've seen several companies this earnings season come out with preliminary numbers. Basically, if a company comes out with preliminary numbers, it's basically because their numbers are so far off of what the company had estimated and what maybe even analysts were at, okay? And usually it happens on the downside. So if a company misses their numbers bad, they come out and preliminarily announce their numbers, okay? And so that's what Nvidia had to do, okay? They're expecting revenue to be $6.7 billion, which is well below guidance and estimates calling for $8.1 billion. The miss was primarily due to weaker than forecasted gaming revenue, which will come in 33% lower year over year to $2.04 billion. Nvidia, at least in the short term, is in a bad place, okay? And I mean, they're in the gulag, okay? To be quite honest, Nvidia in the short term is in the gulag. When you come in, you have to preliminary announce that you are going to miss your estimates by $1.4 billion. You are in the gulag. And Nvidia, the only way Nvidia is going to get out of this, at least in the short term, is by honestly, a big game being launched, in my opinion. And I think COD coming in the fall definitely has a big potential, but they also need the economy not to fall apart in between that whole situation happening, okay? So, yeah, Nvidia's in a bad spot short term. And that Nvidia is such a large company nowadays. This has ramifications for all stocks. This moves technology stocks in a big way. It moves the market from potentially risk on to risk off. It moves, obviously, stocks like AMD, right? It moves all the semiconductor stocks. Like, it moves so many various stocks in the market, right? And it can even move big tech in general, right? And it has wide-ranging implications, even to a stock like Micron, which is a very well-run memory chip company. But at the end of the day, when it comes to a stock like Micron, this one's starting to downtrend again. Here's the deal with Micron. We got Apple coming out saying numbers are, I mean, if you looked at the Apple numbers, they're the weakest they've been for Apple in some time, okay? And they didn't even want to give guidance. So we know likely smartphone sales are probably going to be weak for, let's just say, at least the next few quarters. Laptop sales probably as well. I would say tablet sales probably as well, right? All those devices memory goes into. You have a company like Nvidia coming out, missing their numbers by $1.4 billion, their revenue estimates, which is a gigantic number for a company that has that sort of revenue, right? So we're in a pickle where even a stock like MU is just in a very, very tough place. And unless we get a massive turnaround in electronic sales, like how can you get these stocks to go up? And are we really going to get a massive turnaround in electronic sales? I'm not so sure with kind of the state of the economy and the fact that inflation slices and dice people, and I always bring it back to this. The middle class is what runs the economy. That's what runs the, all these companies' earnings. It's run by the middle class. Like, I always people want to give credit to, like the rich or something like that. It's like, no, they're not the ones that are out. Who do you think's buying all those damn iPhones? It's the middle class, okay? You only got a small sliver of super rich people, right? And yeah, those people, sure, they buy a new iPhone, but it's a very small percentage of the population, right? You need the middle class out there buying the new iPhones every year, okay? You need the middle class out there buying Nvidia chips and AMD chips every year, right? This is what you need. You need the middle class to be out there clicking on the Google ads and going on Meta, Facebook, and Instagram and all these different platforms, right? And TikTok. And you need, like that's who's running the numbers. So the middle class, although they sometimes get disrespected, the middle class runs the show. Let's be clear. And if the middle class is not in a healthy place, companies cannot be in a healthy place. And that's bottom line. If the middle class is doing well for themselves and they're flush with their pockets, right? Believe me, that money's going to flow to these companies. And people are going to go buy this and buy that and go to the restaurant and do this, right? We know the middle class is going to spend money if they got the money to spend. But if they're not and they're in a tough place, everybody ends up having to get hurt in that situation. There's no easy way out, okay? That's just the way it is. It's as simple as that, okay? And so, yeah, that's a kind of a situation that obviously we have going on there with MU, right? Kathy Wood stocks across the board just got, I always keep this, watch list, even though I have no money invested in ARK or anything like that. I always keep, these stocks on my watch list just because I like to see, like, is it risk off day or is it risk on day? And obviously today's big risk off, okay? Big risk off. Oat futures still continue to tank. This is good news for Oatly shareholders. This is going to, obviously, in my opinion, help margins dramatically in the back half of this year. And as you go into next year, Oats went on this just silly bull run for like a year long. That's come to an end now at this point in time. And the bull run that a lot of these commodities have been on is it's ended now at this point in time. Let's just call it what it is. And, things are starting to come back to reality, right? And that's a good thing for actually a lot of companies, because a lot of these companies have just been decimated by the fact that commodities went through one of the most insane bull cycles we've ever seen from commodities. Certainly in modern times, it's been ridiculous, okay? Oil futures. So, obviously we peaked a couple months ago and we're kind of just going down and down and down now at this point. Now, some folks are speculating, I would call it that if we go risk off in the market and the market starts to tank again, right? That oil, some people think that oil then in that scenario is going to go up, okay? And the reason I think some people think this is because if we watch what played out, several months ago, the market was tanking and all of a sudden oil was flying high, okay? And so since that's the most recent scenario that's in the back of people's mind, people are now starting to think, I need to buy oil futures. I need to, get in something like a USO. I need to buy oil and gas stocks because, we're about to go on another big bull run if the stock market falls. It doesn't usually work like this, okay? And what happens many times is if the stock market's falling, if the economy is getting worse, okay, what ends up happening in that scenario, oil price ends up falling usually. Just because it didn't happen in the most recent scenario doesn't mean that's like this is the way it is now, like stocks go down, oil goes up, or vice versa. Like that's not the way it works. Usually those things can kind of work together, okay? And if you're trying to be bullish on oil, you don't have good fundamentals there to be bullish on, just to be quite honest, okay? Summer gasoline demand in the U.S. drops below pandemic levels. Falling pump prices are not luring drivers amid rising inflation. Gasoline futures plunged Wednesday on demand decline, okay? I gotta say, I notice it. When I drive around here in Vegas, I don't see as much traffic as I used to see. And I'm not talking about like the strip area, like going anywhere in there. I'm talking about on the main highways, like the 215 and whatnot. When I drive on those highways, which is just like obviously residential, people that actually live in Vegas drive on those highways, right? When I drive around, there used to be a lot more traffic, and I've noticed a considerable drop-off in the amount of traffic over the last few months. And I think that's just a lot of people that are thinking twice before they go drive somewhere now, to be quite honest. And with how high gas prices got, I think a lot of people are just turned off of trying to drive anywhere. And they're thinking 2, 3, 4 times before they drive anywhere. And they're like, do I really need to drive there? And then it's like, if it's a yes, they're like, okay. And then if it's like, I don't really have to go there. They're not, no one's looking for any excuse to drive anywhere right now. And so I love to look at the numbers and the data, but I also love to look at the real world. And I'm like, what I see in the data and what I see in the real world, actually these things match up. And, that's just something to kind of keep in mind there. And I was in Arizona a couple weeks ago. I didn't see as much traffic in Arizona, which if you live in the Phoenix area, you know how much traffic there is in Phoenix area. It's gotten insane. It's not as bad as LA, but it's gotten pretty insane over the last few years. I gotta say, when I was driving around, we flew around that city, man. The loop, I didn't run into any traffic anywhere. It was a thing of beauty. So this is just something to keep in mind here, man. The fundamentals are not in favor of oil prices right now. That's just bottom line. So you're kind of on hopes and prayers if you think oil is going to go up anytime soon. And never mind that, if we get a sustained recession where unemployment climbs and all those things over the next, let's call it 6 to 9 months, if that was a scenario that played out, guess what's going to happen? Oil price will keep dropping. Look what happened in the great financial crisis. Oil collapsed. Look what happened in 2020. Oil price collapsed. That's what happens when you have a weakening economy and you have a bunch of people pull back on driving, okay? Now, speaking about running out of gas, the NASDAQ is running out of gas. Let's just call it what it is, okay? This baby off the June lows is up 17.7%, but it's very clear over the past, let's just call it week or so, this baby's run out of gas now at this point in time, okay? Now, the only thing that could get this guy to gas back up and start roaring again and start climbing is if CPI comes in way better than expected, and we'll go over those numbers in just a moment. If CPI comes in way better than expected, we can fill the tank back up and start going up again, okay? But that's the only scenario. If it comes in worse than expected, if it comes in about what we expected, we could definitely see a pullback here. The market tends to get overextended on sell-offs and climbs. That's just the way the market works, unfortunately, or fortunately, depending upon what stance you look at. And in June, we got way oversold. I mean, way oversold. It was out of control. Even bears in the market. This is interesting. Even the bears in the market that I know, and even ones that I watch, like even Jeremy Grantham, I watched an interview with him. Even he was calling out that, hey, there's going to be a rally coming. When Jeremy Grantham says there's going to be a rally coming, dang, there's a rally coming, because that man is like the most bearish person you pretty much almost find on the planet, okay? And so, I think this is something that we had coming, but maybe we rose a little too fast. I mean, 17% plus in a matter of, let's call it 6 trading weeks or so. It's a pretty substantial climb, okay? And so, but at the same time, if CPI comes in way better than expected, hey, we can fill the tank back up and keep going, okay? But you're going to need that to happen there, okay? As far as CPI numbers, a friend texted me this over, 8.7% is the number that is expected year over year here in this situation. So, if we came in with, let's say, an 8.3, an 8.1, 7.9, if you want to think about the possibility of maybe putting a little gas in the tank, right? Or maybe filling the electric car up with a little electricity, that might be a situation where we go back further risk on and the rally continues, because then the way the market would look at that, the way Wall Street would look at that is, the Fed doesn't have to be as aggressive now. Inflation's getting way better, way faster than anticipated. And if that's a scenario, obviously, that's more of an ideal scenario for the stock market. Also, the other way people will look at that is, for the middle class specifically, if inflation's getting into a better spot, it's going to stop stealing so much money from those folks' pocket, which obviously is a pretty darn important factor, okay? And so then the view would be, yeah, we got a next tough quarter or two, but in 23, things are going to get better and better. And we know the stock market plays a game where it's usually anywhere from 3 months to 9 months playing in the future. And so what Wall Street cares about, what the stock market usually cares about, is where things are going to be at 3 months to 9 months from now. So if inflation comes down much more quickly than anticipated, the stock market could rally into that, because it's looking at it from the perspective of like, hey, we know what's about to happen, and yeah, we got a bad quarter or two in front of us, but things get better from there, okay? So that's just kind of what, the way the market looks at it. As far as me, I've been cashing up here for a bit as the market rallied. So if we do get any substantial drop, any crash back down, I'm obviously ready to take advantage of that. Hope you guys enjoyed this video. As always, today's video is sponsored by my Instagram page. Have you followed me on Financial Education Jeremy? By the way, if you're looking to follow me, make sure you spell my name right, okay? Because I have so many accounts that impersonate me on Instagram. It is ridiculous, okay? And also, I will never go out of my way to message you, okay? If you message me, there's definitely a probability I'll get back to you. Let's just put it that way. But I will never go message you, because people that impersonate, they'll go message somebody that follows me or whatever. So just something to kind of keep in mind there on IG. I feel like there's so much stuff that's out of control with all that stuff on Instagram, and then the YouTube comment section. Oh my gosh, it's just ridiculous. But anyways, it is what it is. Social media is crazy. Much love as always, guys, and have a great day.